Finding structural points of higher high, higher low in an uptrend, lower high, lower low in a downtrend most at times are difficult. As a beginner, it's very tasky when it comes to trading. So there should be a system which you can leverage on that will give you same result while you keep developing yourself. That is the greatest secret I'll be sharing with you in this video. A very simple and easiest way of analyzing the market and finding your entries. So in this video, we'll be combining EMA, which is our exponential moving average, and price action in finding out our entries. So number one, our first checklist is open your chart. You want to discover what is the trend of the market. And on my chart, we are seeing a combination of two indicators. The first indicator is our Bollinger Band, and this is Bollinger Band. The period is 130, deviation is 2.0, the shift is 0, apply to close, 3 pixels, and the color is green. Then the second indicator for this class is our moving average. The period is 50, shift is 0, exponential, apply to close, 3 pixels, and the color is blue. So let's go back to our chart. So when you open your trading chart, it looks exactly like this. So number one condition is we want to identify this of this market. So let's assume that when we open the chart, when we open this chart, this shaded portion has not happened. So what we were having on the chart is all this movement that happens from our left side. So looking at it, the first thing we realize, and for us to establish the direction of the market, we'll be using our Bollinger Band combined with the moving average 50. So first of all, we are going to use our middle Bollinger Band. That is, whenever price closes below the middle Bollinger Band, it is established that we are in a downtrend. Please, this should be done on H1 and above, on 1 hour and above. So we establish that we are on a downtrend because price is below our moving average and our middle Bollinger Band. So having established this, we'll pick our trend and roll our trend line in this way. So having done this, we expect that price will keep on respecting our trend line and our moving average. And coming to this downside, price break out of our trend line and then find its way. Okay, but the first thing is we want to know our trend, and with this we know that we are now in a downtrend. The second condition, knowing that we are in a downtrend, is where can we find entry, because in a downtrend we should be looking for only opportunity to sell. So where do we find our entry? We'll be looking for a pullback. We'll be looking for price to pull back to our moving average, which is where we are here. So we want to see price pull back to our moving average. So now price is pulling back. So let's begin to open our moving. Okay, let's now begin to open. Good. Now price pull back to our moving average. Now the price is at this zone of our moving average. What is the next condition that we are looking for? Now, if you must use 1 hour for your entry, then you need to wait for a candlestick confirmation. Alright, and looking at these candlesticks that were formed here, we have this bearish engulfing candle. We have this particular bearish engulfing candle which engulfed this from our middle Bollinger Band. But the price, this engulfing candle, we need a follow-up candle. This is where it is very, very important. Having only one engulfing candle is not enough for us to make entry. We need a follow-up candle. We need another bearish candle to follow this one. Then after that, we can make our entry. So we did not get a follow-up candle. This entry is not valid for us. So we don't have a valid entry, so keep opening, price keep on playing. And coming to this point as well, we have now another bearish engulfing candle, but do we have a follow-up candle, a bearish follow-up candle here? No, we don't have a follow-up candle here as well. So this entry is not a valid one for us. And then look at what happened. Price went back to the upside, and when price went back to this upside, price has now gone up and has closed above our 50 and middle Bollinger Band. So what happened here is a fake out, and we use this strategy now, this follow-up candle, to escape from the fake out. Then coming here, price went back this time around and closes above our middle Bollinger Band and our moving average. So we should be looking for, which tells us that okay, we have a change of direction, a change of trend. Okay, remember we said we are using two patterns. One, we trend line and our moving average. So when this price broke out of this trend line, all you need to do is you place another trend line below, just as you can see, because already price had broke out of our previous trend line here. And since it is at the lower Bollinger Band, we know it is an exhaustion point, so we are expecting a reversal in any of that zone. And so we now have our new trend line that we have placed here. So when this price that went to our moving average give us a pullback, okay, it gave us a pullback from here, but unfortunately this pullback engulfing did not have a follow-up candle, so we couldn't take the trade. But look at what happened when it pulls to our trend line. It gave us a pin bar candlestick pattern. So with our trend line, we are going to wait if it will give us a follow-up candle, and after that it gave us another follow-up candle, right? And after that it also gave us a hammer follow-up candle. So we can now come up to make our entry up here, and then we can have our stop loss below 15 pips below the pin bar. So I believe this is simple, it is understood. Then we now move to the upside. So we would have made this entry and be in this profit. So for our second entry, we want to see price coming back to our moving average again. Okay, let's be opening because we assume that this side that is shade has not formed, and then price pull back to our moving average. Okay, when it went up, we assume uptrend formally. So when it came, we are expecting to see a rejection either from moving average 50, from our trend line, or our middle Bollinger Band. But looking at this, we are all having a bearish candle. There is no bullish signal. Then coming to this point, we have some little rejection of some pin bar, series of rejection. But we couldn't make entry here because there is no follow-up candle in this zone. There is no follow-up candle in this zone. Then here, what happened next was that price, we couldn't go buy because there is no follow-up candle. And then look at price now break through and give us a bearish engulfing candle. And this particular bearish engulfing candle happens from inside this zone. And remember, when price is coming from it, our candlesticks and so our trend line, we will now draw our trend line because we are expecting price to break out of the trend line. So price came here now, gave us this bearish, no follow up, give us this bearish, and then give us this particular bearish with a follow up candle. So, but are we going to make a sell entry here based on this? No, we are not going to make a sell entry. You might be asking me, why are we not going to make a sell entry? Because there is no cross of our EMA 50 have not crossed the middle Bollinger Band. If hadn't been it has crossed it to the downside, we would have looked for a buy entry, a sell entry. But since it did not, we know that this thing is a fake out, and as such, we will not make entry here. But even though you decided to make entry here, your stop loss would have helped and would have taken you out. So with this buy, you are still not in a loss, regardless of whatever means you might have or whatever decision you have taken in that zone. And now we want to see price came back now, and look at here. What happened here now is that price break through our moving average and move back to the upside. Price as well break through our trend line, move. So we know that this is our original direction of the trend since the moving average did not cross each other. Okay, so when this price break out of this zone and has begin to move forward, we see this bullish candle and we know that this is buyer's pressure, but we will not be in a hurry to make entry. Price keep playing around. Then we have this rejection. Then upon this follow up candle here, we will now make our entry at the close of this follow up candle, and our stop loss will be somewhere here. And you can see how that particular trade plays out beautifully well. You can see how it plays out all the way to that upside. Then now we are looking forward. So immediately we have this whoop because price is now moving in an up direction, and then this is our trend line again. So we are expecting that, okay, we are in an uptrend and price has not gone below our middle Bollinger Band nor below our EMA. Neither have they crossed each other. So we will now wait for price. Price break our trend line, which of course we want price to pull back to our Bollinger Band and the zone of our EMA so we can make a buy entry. And look at what happened. Price pulled back into this zone again and gave us a beautiful pin bar. Look at this pin bar. But we have no follow-up candle. We need another bearish candle, another bullish candle to confirm this entry, and we don't have anyone. So price pulled back again, and here gave us an evening star formation, which could have been our entry for a buy. So we have this, we have not made entry, we need a follow-up candle. Then we have this bullish move, of course, which now becomes more like a follow-up candle. So you have your entry here, and then your stop loss, because our condition for entry is this evening star, stop loss is 15 pips, and upon this order rejection, this pin bar here would have been a double confirmation, and you can see how we could have been in this market all the way to this point as our guide. Okay, because price will take time to cross the moving average, but it will cross our trend line very fast, and as such we can easily exit the trade. So whenever price break to our trend line and give us a follow-up candle from the candle that break the trend line, you exit immediately, knowing too well that a reversal is almost about taking place. And then we move further to have this beautiful move. Afterwards, from that, price pull back now into this zone. Price is still in an uptrend because we have not break any of this zone. And then look at here now, price pullback gave us an engulfing candlesticks and a follow-up candle. So virtually we will buy here, and after you bought, you have your stop loss 15 pips here, and price keep playing around, and immediately you have this your stop loss. All you need to do now is that you have to put your trend line in place. This is your trend line. Okay, your stop loss is 15 pips below, and immediately price break this your trend line, you could have exit this market with a little drawdown, and afterward, look at what happened. This moving average crosses our, can see how the moving average crosses our middle Bollinger Band, which signifies to us a change of market direction, which is a change of trend. Then immediately you pick up your trend line. We now know that we are in a new market direction because this trend line was broken from this side, and the moving average crosses each other here. Price now pull back to the downside. Okay, now the price has pulled down here, this candle that come down is what motivate this cross. So this particular candle is not an engulfing candle. A cross just happened. We want to see a pullback into our Bollinger Band, and look at what happened here. We have this beautiful pullback into our Bollinger Band, an bearish flag pattern. It is very obvious when you go below to a lower time frame. You will see how obvious this chart pattern is. And then look at what happened. Evening star, a follow-up candle. So by this follow-up candle, we now have our entry here, and you would have sold to somewhere around this point, and immediately you make your entry, you would have put a trend line. and then immediately price approaches it and break through it, you know you have to close. Then we close and we see price now break. We put another trend line again. Okay, then we have this particular trend line, and then price pull back into our indicator, our moving average, and look at what happened. Price come back, went up, closes below, and then see this candle, this rejection, this follow-up candle. We have our entry and we could have cashed this move. Now the same thing, price pull back to 50 period DMA, and here we couldn't get any follow-up candle, so we don't have entry here. And at this point, price pull back into the moving average, but we don't have an entry here because there is no cross. We are not looking forward to buy. Why? Even when price closes outside the middle Bollinger Band and we have this candle, we did not have any follow-up candle. Even when we have this hammer, we don't have a follow-up candle, and our moving average did not cross each other. Okay, and because the moving average have not crossed each other, we still wait and we have assumed and we know that we are still in a downtrend. And after that, look at what we now begin to have. We have this pin bar 1, pin bar 2, pin bar 3, and this follow-up candle closes below 50 EMA. And with that, you may now make your entry, and your entry on this candle, beautiful one there, and you wait for the price to play out, and you see how price came all the way. Once price come to a lower Bollinger Band, you exit because an exhaustion point, and price went back until this point. Now we have a change of trend. The indicator cross each other, and since it crossed, price has not pulled back, so we'll always wait for a pullback for us to make our entry. And look at what happened. To show you how price will expect this thing, price now pulled back into our moving average, but we want to see price closes out. Then we have this rejection, no follow-up candle. We have this, no follow-up candle. We have this, we have this. We can make our entry here, but if you are conservative, you can wait to have this bullish engulfing candle followed by this follow-up candle. You have make your entry here, stop loss is here, and you can see how this thing plays out beautifully. Please go rewatch this video and practice it out, and I believe you are gaining value from this video. Please do not forget to like, do not forget to share, turn on your notification bell so you'll be the next to get notified whenever we publish our next video. And please support our channel by subscribing, like, and ask your question in the comment section. See you